Ever wondered what ETFs are and how they work? Today you're going to find out. ETFs, or exchange-traded funds, are an intriguing blend of different investment worlds. Picture your favorite smoothie. It's not just one fruit, right? It's a blend of various fruits, each adding its unique flavor. Similarly, an ETF isn't just one security but rather a collection of different securities such as stocks, bonds, and commodities. And like that smoothie, which you can customize to your liking, ETFs offer a great deal of flexibility. They often track an underlying index, much like a mirror reflecting an image. The image in this case could be anything from the S&P 500 to a specific sector or commodity. ETFs are a fascinating part of the investment landscape, a blend that offers both the diversification of mutual funds and the simplicity of trading individual stocks. Now that we know what ETFs are, it's time to delve deeper into how they work. You might be wondering, how do ETFs work and how are they different from other investment options? Well, let's dive right in. ETFs, or exchange-traded funds, are a type of investment fund and exchange-traded product. They're designed to track the performance of a specific index, sector, commodity, or asset. Now here's where it gets interesting. Unlike mutual funds, which are traded only once at the end of each trading day, ETFs can be bought and sold throughout the day just like individual stocks. That's right. If you want to buy or sell shares of an ETF at 10:30 in the morning, you can do just that. This ability to trade throughout the day is a unique characteristic of ETFs, and is largely due to the way they're structured. ETFs are created and redeemed in kind, meaning in large blocks of shares called creation units, by institutional investors and the ETF's manager. This process helps keep the ETF's price in line with the net value of its underlying assets. But wait, there's more. The price of an ETF changes throughout the day as it's bought and sold. This is different from mutual funds where the price is set at the end of the trading day. So if you're the type of investor who likes to keep a close eye on your investments and make decisions on the fly, ETFs might be a good fit for you. Another advantage of ETFs is their liquidity. Because they're traded like stocks, they offer high liquidity, meaning you can quickly and easily buy or sell shares. This is particularly useful in volatile markets where you might want to move quickly. And let's not forget about costs. On average, ETFs have lower expense ratios than mutual funds. This is because they're passively managed and aim to replicate the performance of an index rather than actively trying to outperform it. Now you have a better understanding of how ETFs work, but why should you consider investing in them? Investing in ETFs comes with a host of benefits. Let's explore some of them. First and foremost, ETFs provide an opportunity for diversification. They are essentially baskets of different stocks, bonds, or commodities, allowing investors to spread their risk across a variety of sectors and industries. This is particularly beneficial for those who are risk-averse, or those who prefer to not put all their eggs in one basket. Next, ETFs offer flexibility. Unlike mutual funds, which only trade once a day at the market close, ETFs trade like stocks. This means you can buy and sell them throughout the trading day at fluctuating prices. You can even use advanced trading strategies such as short selling or buying on margin, which are typically not available with mutual funds. Another advantage of ETFs is their cost effectiveness. They generally have lower expense ratios compared to mutual funds. This is because most ETFs are passively managed, aiming to replicate the performance of an index instead of beating it. Lower costs mean more of your money goes towards your investment, potentially leading to higher returns over time. For beginners, ETFs can be an ideal choice due to their simplicity and accessibility. They provide an easy way to gain exposure to a wide range of assets without the need for extensive knowledge or large amounts of capital. You can start investing in ETFs with as little as the price of one share. Furthermore, ETFs offer transparency. Their holdings are disclosed daily, allowing investors to know exactly what assets they own and in what proportions. This is not always the case with other investment products where holdings may only be disclosed quarterly or semi-annually. Lastly, ETFs can be more tax efficient than mutual funds. This is due to their unique structure and the way they are traded, which can result in fewer taxable events. Impressive, isn't it? But like any investment, ETFs also come with certain risks. Let's delve into that. While ETFs offer many benefits, it's crucial to also understand the risks involved. Firstly, there's market risk. Just like any other investment, ETFs are subject to the ups and downs of the market. If the securities in the ETF plunge, so does your investment. Secondly, we have liquidity risk. Even though ETFs are traded like stocks, there might be times when there's not enough trading volume. This can make it hard to buy or sell your ETF shares at a desired price. Thirdly, there's the risk of tracking error. This means the ETF might not perfectly mimic the performance of the index it's supposed to track. This discrepancy can be due to various factors like management fees and the inability to hold every security in the index. These risks underline the importance of doing thorough research before investing. You need to understand what you're buying into and be comfortable with the potential risks. With the knowledge of these risks, you can make a more informed decision about whether ETFs are right for you. So, are ETFs the right choice for you? Let's recap what we've learned. ETFs, or exchange-traded funds, are investment funds that trade like stocks. They offer a unique blend of diversification and flexibility, as they allow investors to buy a wide range of assets in one go, while also being able to trade them throughout the day. However, it's important to remember that, like all investments, ETFs come with their own set of risks. They are subject to market volatility and the performance of the underlying assets, which can lead to losses. If you're unsure about whether ETFs are the right investment vehicle for you, don't hesitate to seek professional advice. Financial advisors can help you understand your investment options and guide you towards a strategy that aligns with your financial goals and risk tolerance. Remember, the key to successful investing is understanding your options. ETFs are just one of the many tools available to you. Happy investing!